The news ticker flashed across screens worldwide, its urgent message impossible to ignore. In living rooms, offices, and crowded city squares, people stopped what they were doing, eyes glued to the unfolding story. Beijing in panic, consumer spending collapses to record lows. Once bustling shopping streets now stood eerily silent, as if the city itself was holding its breath. Retailers closed their doors early, and anxious shoppers clutched their wallets, uncertain about what tomorrow might bring. It was a headline that sent shivers through global markets. Traders watched in disbelief as numbers plunged, and the world's financial centers braced for impact. For decades, the world had bet on China's unstoppable growth and rising middle class. The country's booming cities and thriving malls had become symbols of prosperity, fueling optimism far beyond its borders. That single headline suggested the bet was failing. Investors, analysts, and ordinary citizens alike were forced to confront a new reality, one where the old certainties no longer held. The engine of the global economy was threatening to stall, and everyone was watching. International ports slowed, and trading floors fell silent as the world waited for answers. In Shanghai, luxury malls stood empty, shopkeepers anxious, and online sales plummeted. The city's glittering retail palaces, once filled with eager shoppers, now echoed with uncertainty. The vibrant energy of Chinese commerce had been replaced by a heavy, anxious stillness. Business owners watched the days pass, hoping for a sign of recovery that never seemed to come. This wasn't a minor dip, it felt like a fundamental shift, a deep loss of confidence across a nation of 1.4 billion. In homes and cafes, conversations turned to worry and uncertainty about the future. The freeze in spending was the culmination of months of warning signs. Property market trouble, youth unemployment, and now, undeniable crisis. The warning lights had been flashing, but now the alarm bells were ringing. The very consumers meant to power China's next chapter were locking their wallets. Young people, once the drivers of new trends and technology, now hesitated before every purchase. The world held its breath, waiting to see what would happen next. From New York to London to Tokyo, the ripple effects were already being felt. Was this a temporary storm, or the first tremor of an economic earthquake that could shake the entire global system? The answer, everyone knew, would shape the future for years to come. It's hard to overstate the speed and scale of China's transformation. Just decades ago, China was rural, impoverished, and closed off. Then, the nation opened up, embraced manufacturing, and cities rose from farmland almost overnight. Highways, high-speed rail, and millions of cars replaced dusty roads and bicycles. Hundreds of millions gained disposable income, buying appliances, homes, and even traveling abroad. The Chinese consumer became a force, fueling both national optimism and global growth. Western brands flocked to China, and shopping became a national pastime. The belief was simple: life would only get better. This optimism powered China's economic engine and drove global demand. The formula was clear: make things for the world, build at a historic pace. Factories churned out everything from t-shirts to iPhones. The government poured trillions into infrastructure, lifting 800 million out of poverty. The world watched in awe, convinced China had found a permanent path to prosperity. But no tree grows to the sky. Almost overnight, China's optimism cracked, sending shockwaves through every corner of daily life. The sense of hope that once filled the streets was replaced by anxiety and fear, as uncertainty crept into the minds of millions. The free-spending consumer now hesitated, questioning job security, salaries, and the future. Even simple purchases became fraught with doubt, as people wondered if they could afford tomorrow what they bought today. Uncertainty led people to stop spending and start saving. Retail sales stagnated, car sales plummeted, and the once bustling shopping centers grew eerily quiet. Even online shopping festivals, once a symbol of China's consumer power, disappointed, with fewer packages shipped and less excitement in the air. The confidence of the Chinese consumer was deeply shaken. Families gathered at dinner tables discussing how to cut back and make ends meet. The fear of a difficult future now outweighed the desire for a better present. People began to prioritize security over comfort and caution over dreams. Take Li Wei, a software engineer, once planning to upgrade his life, now selling his car, canceling vacations, and saving every yuan. His story is not unique, but a reflection of a broader trend. His story is echoed in millions of households, where dreams are put on hold and every expense is carefully weighed. This new era of caution marks a dangerous turning point. The mood has shifted from hope to hesitation, and from spending to saving. China's leaders had hoped consumer spending would drive the next phase of growth, fueling innovation and prosperity. But the psychological shift is profound. The collective mindset has changed, and rebuilding trust will not be easy. The dream of endless prosperity has been replaced by economic insecurity. Once crowded luxury stores now stand empty, a stark reminder of changing times. The Great Wall of Caution, built from individual fears, now stands as the biggest obstacle to China's recovery. It is a barrier not of stone, but of sentiment. The world is watching as China's consumers retreat, wondering what this means for the global economy and for their own futures. The question remains, can confidence ever return, and will China's consumers once again lead the way to growth and prosperity? China's high savings rate has surged, revealing deep anxiety. For years, saving was seen as prudent, a source of capital for growth. Now, it's a problem. When everyone saves and no one spends, the economy stalls, the roots run deep. China's social safety net is thin, so families save for inevitable storms, illness, unemployment, aging parents. This self-reliance is passed down through generations, reinforced by memories of hardship. Even in good times, the instinct is to save for a future that might not be bright. Recent turmoil, youth unemployment, property crisis, aging population, has amplified these fears. The rational response cuts spending, hoard cash. Multiplied by hundreds of millions, this becomes a national economic disaster. The government's challenge is not just economic, but psychological. Until people feel secure, spending won't return. The savings habit, once a strength, now threatens China's future. For decades, property was the bedrock of the Chinese dream, a symbol of success, stability, and the most important family investment. Owning a home was more than just a roof over your head. It was a mark of achievement, a source of pride, and a promise of a better future for the next generation. People poured their life savings into homes, convinced that property values would always rise. For many, buying an apartment was the ultimate goal, a way to secure their children's future and climb the social ladder. This widespread belief fueled a relentless construction boom, making property a quarter of China's entire economy. Towering cranes and new developments became a common sight in every city. But then, the bubble burst. Evergrande, once a giant in the industry, defaulted on massive debts, triggering a sector-wide crisis that sent shockwaves through the country. Millions of ordinary people lost their savings on unfinished apartments. For the first time in decades, property values began to fall, shattering long-held beliefs. Families watched their hard-earned wealth evaporate almost overnight, and the psychological shock was immense. The sense of security that property once provided was gone. The safest investment in China had suddenly become the riskiest, leaving people anxious and uncertain about the future. Confidence was shattered. People no longer saw property as a reliable path to wealth, and many began to question the wisdom of investing in real estate at all. With so much household wealth tied up in real estate, falling values made everyone feel poorer, affecting not just homeowners but entire communities. When people feel poorer, they spend less, on everything from daily necessities to big-ticket items. The ripple effects are felt across the economy. The property crisis accelerated the collapse in consumer spending, leaving businesses struggling and local economies stagnating. It's not just a financial problem, but a deep psychological blow that has shaken the confidence of an entire generation. China's economic engine is now sputtering, and the world is feeling the tremors as uncertainty spreads far beyond its borders. Facing crisis, Beijing acted, cutting interest rates, funding infrastructure, offering subsidies. But these measures have failed to restore confidence. The old playbook, stimulus and construction, no longer works when people are afraid to spend or borrow. Building more infrastructure doesn't help when the country is already saturated. The real issue is a crisis of confidence, not a lack of credit. Unlike the US, China has resisted direct cash handouts, fearing waste or dependency. As a result, those most in need get little help. Without bold policies that address core anxieties, like a stronger safety net, consumer confidence is unlikely to return. The government is pushing on a string, unable to spark growth in a fearful nation. As spending collapses, deflation emerges, a toxic threat. Deflation means falling prices, which sounds good, but it paralyzes economies. When people expect lower prices, they delay purchases, causing demand to fall further. Businesses cut prices, then costs, then jobs, fueling unemployment and weaker spending. This downward spiral is hard to break. Deflation also makes debt harder to repay, increasing bankruptcies and instability. China now shows classic symptoms: flat or falling consumer prices, declining factory prices, brutal price wars, supply overwhelms demand, and the risk of a deflationary trap grows. If this continues, China could face years of stagnation, with global consequences. The world is watching as China teeters on the edge. Breaking the cycle will require more than economic tweaks. It needs restored confidence. The stakes couldn't be higher. China's deflation could become the world's problem. For 2 decades, the world relied on China as its growth engine. Now, that engine is sputtering, and shockwaves are global. Countries exporting to China, Australia, Brazil, Germany, see demand plummet. Luxury brands and tourism suffer as Chinese consumers pull back. The impact goes beyond trade. Chinese companies are major borrowers, and defaults could hit global banks. Investor confidence is shaken, money is pulled from emerging markets, and instability spreads. China's slowdown is a symbol. The era of rapid, globalization-fueled growth may be ending. Companies worldwide are delaying investments, fearing the ripple effects. This atmosphere of caution can become a self-fulfilling prophecy, slowing global growth. The world is discovering just how much it depends on China's health. We stand at a precarious moment in history. China's crisis of confidence is now a global problem. The government's tools seem inadequate for the scale of the crisis. Without a fundamental shift, rebuilding the safety net, restoring confidence, the spiral may continue. A prolonged Chinese recession could reshape the world order, making China more unpredictable. The global economy is more fragile than many believe. Is this a severe downturn, or the start of something bigger? One thing is certain: the world is watching and holding its breath.